Hello everybody, welcome back. So have a look at Bitcoin then, shall we? Because Bitcoin is the one that's going to dictate the moves for pretty much all the coins at the moment. We're a bit of a strange, but also what looks like a really good opportunity to be making trades on. So before I start, I'm not a financial advisor. This is not financial advice. This is my take on the market. This is my analysis, and this is what I'll be looking to do myself. So first of all, what I should say is that it looks as though the easy trade has already been made, and that trade would have been breaking down beneath this area here. Finding a bounce and coming up beneath above it is a good sign. So, like I say, because I'm not a financial advisor, this isn't financial advice, blah 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 blah, I'll just run through what exactly is going on with this chart right now. So we're underneath a descending trend here, a rejection from the parabolic top, 20,000, last year's high, 14,000, and the other day, our last rejection that we had from it, around 10,400. This is this rejection, descending trend rejection, and what we've also got is this upwards trend of support, which has only been going for about 6 weeks now, probably just a little less than that. So this carries an enormous amount of weight. Okay, anything to be rejected from here has the opportunity to reject us, and break us down completely, and I mean absolute reversal of trend, which is what it's done. And I know it's only happened twice before, but it happened quite significantly. We could still actually have a significant rejection from here, and this could just be the beginning of that, because we've touched it now. That would be the obvious place for people to sell, and this is the first place that you would look at buying back here, but it doesn't necessarily mean it has to bounce here, but it could do. So like I say, this area here, if were to be broken to the up, would be absolutely amazing. What this would signify would be a continuation of the upwards trend. The bulls would be in full control, and we would likely launch way above 11,000, maybe even quite quickly towards last year's high of 14,000 and beyond. There wouldn't be a great deal stopping it at that point, because the support, the resistances are simply just these levels here. Probably this area around 12,000 to around about 12,500 would probably find a bit of a rejection area, but I think it's more than likely, going to be, the momentum would be quite strong and quite high at that point, that we would continue up to break last year's all-time high, just of last year, relatively soon after breaking this descending trend. And hopefully, we'll stay above there, and we'll see, maybe we could come down to test the trend to see if it's turned into a support. Anyway, that's all theory. Let's get back to reality. Where are we today? So I've been just babbling on a little bit there. So let's cut and dry, nice and simple. Rejection from this is inevitable, but breaking above it is good. Support on here appears to be inevitable, and breaking down would be bad. At the moment, the trade that I said that I took earlier on is the obvious trade, which was when we got supported, essentially where we are right now. A wick came down and we've got brought back up above it. Now we could easily, and to be honest with you, I would expect moves to the up, to come up eventually to test this area again. Maybe not straight away, obviously, but over the next few days, maybe into next week, we will be moving up from beyond this line here and coming up effectively to make a retest of the descending trend. Now first, before we sort of speculate as to what's likely to happen, let's have a look at some of the moving averages, some of these other indicators that we like to use. Now RSI is making a bit of a dive to the down, which it doesn't look very constructive. In fact, it doesn't look good. I mean, it's nice to have a low RSI, especially around this middle zone, because it means that if we do decide to make those launches, we've got plenty of room to go. It's not overbought, it's not oversold. It's essentially neutral, but at the same token, it doesn't have a constructive pattern to it. In fact, it looks a little bit bearish in the way that it goes, so it looks like it actually wants to come back down even further. So that's unfortunate. Same with the money flow index, and the MACD has definitely got a negative slope on it at this point now. That's more than bearish divergence. That's going bearish now, and this, if we were to continue, would actually go into negative territory, and that could bring us back down to much lower levels. And I'm talking about, this would this would be what I started the video in saying, we were ejected from here, and here, basically bringing us into a mini bear market, massive consolidation. So this could be the run. This could be our run over with. And in all fairness, that's not a bad run. If you think about where we came from that big dump, that's over 100%. That's what, 150%. Right from that bottom wick, it'll be way more than that, 170%. No one will have got in on that exactly, but that's what it is. So in all fairness, something rallies 170%. You would expect it to run out of steam at some point. Some people are going to be in enormous profits, absolutely enormous profits. And if you were one of the brave people, the smart people, I suppose, who took longs on any of these levels here, then you'd be in significant profit, and the obvious place to take that profit would be here, which looks to me like what's happened. If you look at the longs versus the shorts at the moment, there's still a lot more people, way more people long than there are short. It's like almost 3/4 long, over 2/3 long, to they are shorts. So the longs definitely stack up against the shorts, and I think people aren't exactly shorting this area right now. What they're doing is they're probably adding to more longs. They're holding on to the longs that they've had from way down here, so they're really in profit. They're not willing to sell at these levels, and some people have sold because that would be the obvious place to sell. So I think that's what's happened here. I think people are now beginning to take profits, and they might be looking at re-entering when we make a decision whether it's to get to the down or to the up. Like I say, we have this wedge formation that we're sort of getting crushed into, and it's not going to be long. Just another few weeks before it cannot go. It has to move one way or the other, and that will signify the big move. And so maybe that would be the best area to jump in on. So this area that we are right now, and like I say, I'm not a financial advisor. This is not financial advice. This area right now is an okay area to be taken along, in my opinion, and which is why I have done it. And the reason why is that I would expect, considering that this is a support that's been held for over the last month, and it's held up quite well. In fact, this is the first time we've had a wick beneath it. But when you draw these trend lines in, they're never going to be perfect. So yes, we have had a wick beneath it, but it's roughly around this level, between 9,150 to 9,200 thereabouts. So obviously $100, give or take. And we're moving back into the formation. We're not having a significant bounce, but we're moving back into it, going down a little bit now. We'll have a look on a smaller, not a 5 minute, maybe a 15 minute to give a bit of context as to what's actually happened. So we had our bounce, and now we're actually trickling back down. So it does look like it wants to test the low areas again, which would be unfortunate for me, because my stop loss will be triggered. But it's a nice enough area to take that area, because your stop loss can be reasonably tight, and the risk to reward is relatively high, because we do have a trend in here which seems to have held quite strong for over the last month. And so if we're using this trend to make a trade, then technically this is the bottom level that you'd want to be trading it on. Maybe my stop loss is at just beneath 9,000, about 8,940. So obviously I could lose a fair bit, but I'm prepared to lose that, because that would be we're talking about a few $100s to essentially the next move up to test this could break it. So that this could be the opportunity to buy in a decent bottom level before we make another really big move, multiple $1,000 moves to the up. And like I say, when you look at the longs versus the shorts at the moment, the longs are still outnumbering the shorts by quite a way. We're talking, like I said, about getting on for almost 3/4 people long at the moment. So the open interest is quite high. So even though the chart does look like it wants to turn bearish, when you look at some of these indicators, there's an opportunity here to at least take it up to this level here, back up to, it's a $1,000 move basically, or thereabouts, $1,000, $800. So you got to be prepared to lose some to gain more. And when I say risk to reward, the risk of losing, let's say, $300 to the reward of making almost $1,000, that's an okay risk reward ratio at the moment. So you can have a comfortable stop loss here. You're not trading blindly, and again, I'm not wanting to influence anybody, but this is the way I see it. I'm not looking to trade blindly. We have a support that's held at over a month, about 6 weeks now, and we're on that support right now. So obviously, if it breaks down and my stop loss gets triggered, that's fine. It could also be a good thing because it means I've got a fair bit of equity left, even though I've lost a little bit, to look at lower levels that would likely be areas such as 8,600, around about the 200 EMA right here, or that's more or less 8,000. Well, I'll be more interested in this level here, 7,700, which is a decent support historically, and also our launch pad for this last sort of boost that we've had into this wedge now. So, like I say, take a trade from here. This is what I'm doing. I don't want you to do anything because you think I've said do it. I'm not telling you to do anything. This is where I'm doing it, and this is why I'm doing it. And the possible trade could be all the way up to last year's high and beyond. Risk reward is looking pretty good. However, the bearish side could mean a breaking of this formation, therefore creating a new formation which would be a bearish one, which could bring us all the way down to technically around about 6,600 would be the lowest I'd imagine, but it's likely to bounce at least around 8,600 to 8,000. And like I say, 7,700. There's many layers of support if this formation breaks down, which is what it would mean if we close a candle body. I'd say, let's just say, for argument's sake, if we closed the candle body below 9,100, it would definitely. Then we're talking the daily candle. I'm only trading daily candles here. This is what means more to me. To trade a daily candle, see that close beneath 9,100, I'll be considering a more of a downtrend after that point there. So I'm not going to look at altcoins or anything at the moment because, as you've seen with today's move, alts have been demolished, and I've not checked the Bitcoin dominance, but just from because I have a favourites list that I have of all my favourite altcoins, just briefly looking at those, the vast majority of them fell further than Bitcoin. So I would expect, despite the move that happened with Bitcoin today, I would expect the dominance is actually up, which means that Bitcoin is going to have more power over the market, whether it moves up or down at the moment. So I'm only really going to be looking at the Bitcoin chart. It doesn't serve any purpose in a situation like this to kind of look at alts specifically unless something's doing something magical, and even then, you only really know when it's done something magical when it's done it. So usually I wouldn't want to trade those once you've already seen the big move. So just to recap, just a bit of a summary. Beneath this trend and above this trend, we're still good to go for a possible bullish move to the up, and I'm talking about a big one. Breaking below this trend, which is 9,100 we'll call it, would to me signify a likely staggered move to lower levels, like 8,600, 8,000, 7,700, and then the ultimate low I would imagine would be 6,600 or so, but that would take time. It's not going to happen overnight. What I have noticed though is that today generally was a bit of a bad day for traditional markets in general, and as much as people like to, especially in crypto, like to think that Bitcoin's decoupled from all of that, it's unfortunately not decoupled whatsoever. You look at the Nasdaq, the FTSE, everything's gone down, oil's down, everything's down, Bitcoin's down. It's very, very, very coupled. It's all tied in. They're all moving together. So world financial markets, the general state of the economy, especially America's economy, we have to take all that on board when looking at this chart, because if this chart says something and then the Nasdaq drops or the dollar, well, I mean, the dollar's going down in price, and that's actually helped Bitcoin in my opinion, but if financial markets if they start to take a turn, a negative turn, and start drooping, I think Bitcoin's going to droop too. I don't think we're going to see any difference in traditional markets to Bitcoin. So keep an eye on the news, in fact, because at the moment where it looks as though maybe traditional markets are topping out and they could be ready for a bit more of a downtrend perhaps, or it could just be a simple pullback off today's bad news. Anyway, I'll leave it with you there. Like I say, I am long on this area, and my stop loss is just below 9,000. So that's just for transparency. That's where I am. But I am, like I say, prepared to see this break down, and obviously at that point I will be looking to maybe add some shorts, or I would definitely be going into Tether and selling up until we see some lower levels, because I would expect breaking down from this formation would see staggered downtrend. But at the moment we're still technically ready to make another stab at breaking this descending trend, and that's what I have my money on at the moment, because there's more money to be made to the up than there is to the down at this very second in time. We'll have to see how this daily candle closes today, and obviously the next few days as well. So it's a very, very pivotal moment in the market, you know. But like I say, the easy trade to me looks as though this would be the one to make, and it would be a long with a tight stop loss, and you know, it could work out to be very, very significant. Anyway, I'll leave it with you there. I thank you for watching. Sorry I've not been making many videos. I you know, work, family life, and also I don't know if I know people on my Telegram, there's a couple who have been interested. Command and Conquer, from the olden days, you remember that game? They remastered it. It looks exactly the same as it used to do, apart from it's in 4K, but you can barely tell. It's exactly the same game. I'm hooked on it. It's basically my favourite game from when I was a kid, and any spare moment that I've got these days, unless there's something really crazy going on crypto, or the missus forces me to spend time with her, that is basically where my free time's going. So Command and Conquer has got me for the moment. If anyone fancies joining me on that, join the Telegram. Maybe we can have a little skirmish. But otherwise, I wish you a good evening, and thanks for watching. Take it easy.